Welcome to today's news impacting the markets. BTC Digital surged by over 35% in after-hours trading on Thursday. Renewed momentum in the crypto sector, marked by Bitcoin's recent all-time high, is fueling this rally. The stock's price rose from $3.75 to $5.14, marking a 37.43% increase. This also comes when Bitcoin breached the $118,000 mark within the last 24 hours. The after-hours jump in BTC's stock price follows a period of relative stability. The digital asset platform stock has been trading between $3.42 and $3.85 over the past 24 hours, with a previous close of $3.46. The company's market cap is currently at $28.19 million. The surge in BTC's stock price came after the company announced significant progress in its Georgia mining project. The project is set to incorporate liquid cooling technology, a development that has piqued investors' interests. Earlier in 2025, the company expanded its proprietary mining operations by deploying 400 new Bitmain Antminer T21 machines, adding about 76 petahash per second of Bitcoin mining hash rate. This move was seen as a significant step in BTC's growth strategy. The recent gain in BTC's stock price comes at a time when the cryptocurrency market is experiencing a renewed surge. In May, shares of crypto-linked stocks and Bitcoin miners were trading higher after Bitcoin reached a new all-time high, rising above 110,000. This included companies like Mara, Strategy, Canaan, and Hive Digital Technologies. BTC's recent stock surge also follows a trend of information technology stocks experiencing significant movements. In June, 12 information technology stocks experienced significant movements in the aftermarket session, including BTCT and Alpha Modus. In other news, the average long-term U.S. mortgage rate has risen, marking the end of a 5-week downward trend. Despite this increase, experts predict that mortgage rates will remain relatively stable in the coming months. The average rate for a 30-year U.S. mortgage increased 6.72% from 6.67% last week, as reported by ABC News via mortgage buyer Freddie Mac. This increase follows 5 consecutive weeks of falling borrowing costs from homeowners. The average rate on 15-year fixed-rate mortgages, a popular choice for homeowners looking to refinance, also rose to 5.86% from 5.80%. The housing market has been slow since 2022, when mortgage rates started climbing from their pandemic-era lows. Higher rates have made borrowing more expensive, reducing buyers' purchasing power and dampening home sales. Mortgage rates are shaped by factors like the Federal Reserve's interest rate policy and investors' outlook on inflation and the economy. Economists largely anticipate that mortgage rates will remain steady shortly, with predictions suggesting the average 30-year mortgage rate will stay between 6% and 7% throughout this year. The 10-year Treasury yield, a key benchmark lenders use to set mortgage rates, rose to 4.37% by midday Thursday, up from 4.34% late Wednesday. Mortgage rates may come down modestly over the coming months, but other economic headwinds, including the impact of tariffs on the prices of consumer goods, weaker labor market conditions, and rising consumer debt, could be what continue to hold the housing market in the second half of 2025, said chief economist at Bright MLS, Lisa Sturtevant. The rise in mortgage rates follows a period of significant volatility in the bond market. In April, mortgage rates spiked to 7.1%, their highest level in nearly 2 months, due to trade tariffs and economic surprises. This led to a decline in home sales and mortgage applications as high rates and economic uncertainty stifled demand. In more economic news, the renowned Warren Buffett Indicator, a crucial valuation metric comparing total stock market capitalization to the gross domestic product, has reached 208.42%. This figure, according to long-term trends, significantly surpasses levels seen before major market corrections. It was around 140% before the 2000 dot-com bubble crash and 110% before the 2008 financial crisis. The figure is calculated using the S&P 500 and the broader Wilshire 5000 index's capitalization. Despite this alarming valuation, indicating a potentially overvalued market, the U.S. economy has demonstrated remarkable resilience. Ed Yardeni of Yardeni Research points out a fascinating paradox, saying, quote, "The economy won't let us down. Despite numerous crises, real GDP has remained recession-resistant since the COVID lockdown during the first half of 2020, end quote. He highlights almost 6 recession-free years amidst global upheavals like the pandemic, the Russian invasion of Ukraine, monetary policy tightening, the Middle East war, and Donald Trump's tariff turmoil. Yardeni argues, saying, quote, "It really has been like the roaring 2020s so far. Real GDP is at a record high, and so is the stock market," end quote. This robust economic performance, however, hasn't translated into widespread public optimism. Measures of consumer and business confidence doesn't seem to be much roaring. Yet Yardeni sees plenty of it visible in the quarterly Buffett ratio. He notes that a useful weekly proxy for the Buffett ratio, the S&P 500 stock price index divided by the S&P 500 forward revenues per share, rose to 3.03 during the July 9th week, matching the record high just before the latest correction started on February 19th. The divergence between sentiment and market valuation, as reflected in the soaring Buffett Indicator, raises a critical question. Is the economy truly roaring in the 2020s, or is the market simply exhibiting an unsustainable exuberance that could lead to a significant correction? The historical context of the Buffett Indicator certainly suggests caution, yet Yardeni's analysis points to underlying economic strength that defies conventional expectations. In other news, President Donald Trump has hinted at a significant announcement regarding the United States' stance on Russia amid the ongoing conflict with Ukraine. Trump expressed his disappointment with Russia's action in Ukraine. He hinted at a major announcement on Russia scheduled for Monday, without providing further details, in an interview with NBC News. Quote, "I'm disappointed in Russia. I think I'll have a major statement to make on Russia on Monday," end quote, stated Trump without elaborating on the details. Trump also disclosed a new agreement between the US, NATO, and Ukraine for the supply of US weapons to Ukraine. Under this deal, NATO will purchase the weapons from the US and then provide them to Ukraine, covering the full cost. It remains unclear whether Trump's statement alludes to a recent proposal in which some NATO members might buy US-made weapons for Ukraine, thereby shifting the financial burden away from the United States. This week, Trump resumed US weapon shipments to Ukraine after a delay by the Defense Department earlier this month. Trump has openly criticized Russian President Vladimir Putin. Nevertheless, Russia launched a deadly missile strike on Kiev on Wednesday, defying his warnings. Secretary of State Marco Rubio on Thursday expressed the United States' frustration over the lack of progress in ending the war in Ukraine during a meeting with Russian counterpart Sergei Lavrov in Malaysia, reported Reuters. The meeting took place amid intensified Russian attacks in Ukraine and growing public frustration from Trump towards Putin. Rubio and Lavrov discussed potential new approaches to the end of the conflict, which Rubio plans to relay to Trump. Meanwhile, Trump is also considering supporting a bill that would impose steep sanctions on Russia, including 500% tariffs on nations that buy Russian oil, gas, uranium, and other exports. In the AI and EV world, Tesla has announced November 6 as the date for the company's annual shareholder meeting amid mounting pressure from investors. Tesla investors are concerned about Elon Musk's political ambitions and mounting tensions with President Donald Trump. The board of directors of Tesla has designated November 6, 2025 as the date of Tesla's 2025 annual meeting of shareholders. A filing by the EV giant with the US SEC showed on Thursday. Amid the news hitting the wires, Wedbush Securities analyst Dan Ives weighed in on the matter in a post on social media platform X on Thursday, saying, quote, "Now the Musk new pay package will be the focus," end quote. And that's today's news impacting the markets. Be sure to subscribe, follow Benzinga for daily updates.